From Deloitte Tax, welcome to the Tax News and Views podcast. On this podcast, we talk to specialists from Deloitte about the latest business issues. I'm Carrie Falkenhayn, your host for Tax News and Views. Today's discussion is part of our global series focused on Pillar 2. And today's topic is on Pillar 2 compliance and reporting. If you listen to the other podcasts in this series, you know that the OECD's Pillar 2 rules are likely to have a significant impact on tax operations. Not only do they change how global businesses are taxed, but they have complex data requirements, complex calculations, as well as complex reporting demands. In order to comply, businesses must coordinate an end-to-end tax, finance, IT, and legal inputs. And this includes having access to the right data at the right level of detail, evaluating existing technology solutions, generating the calculations, preparing and training your resources to do all this work, as well as managing stakeholder expectations. So today we're going to talk about the new compliance requirements and how we're seeing organizations address those requirements. In addition, one of the trends we're seeing is a desire for technology solutions. So we're going to preview a solution that Deloitte has developed. Joining me today is Albert Fleming, a tax technology partner from Deloitte UK, who is leading the team building Deloitte's Pillar 2 compliance and reporting solution. We're also going to hear from Scott Davis, who is the U.S. Global Compliance Center leader. And Scott, I'm going to start with you, and just to get your perspective on how Pillar 2 is impacting clients as they approach compliance and reporting.
Glad to. Thank you, Carrie, and it's great to be here today. I'm going to get right to the punchline on this question and really reiterate what you previously said. Pillar 2 is going to have a profound impact on our larger multinational business clients. This is the first time businesses have had to address the administrative and technological complexities resulting from a global tax system. The Pillar 2 15% global minimum tax system is acknowledged by both the OECD and by the various jurisdictions that have already adopted the system as being complex and will require additional administrative requirements. Now, I think a good measure of determining how complex this will be for our clients and how the magnitude of the administrative task resulting from Pillar 2 is by what they'll cost. And here I'm not talking about the cost of the additional tax that companies might face as a result of Pillar 2, which is really determined on a company-by-company basis and is based on a company's or business's specific facts. But in this case, I'm referring only to the administrative burdens a company will face as a result of Pillar 2. The UK Tax Authority, the HMRC, recently released a Pillar 2 policy paper that provided interesting information regarding this entity's estimate of the cost of adhering to Pillar 2. They identified that being just one-off was defined for their purposes as getting ready to adhere to Pillar 2, that it would cost businesses £13.8 million. So not something that is inexpensive to prepare for. Also, they stated that the cost on an annual basis for adhering to the Pillar 2 provisions would be £8.2 million. So if you combine those two amounts, this is going to be very costly for many businesses, which I think indicates the high level of complexity and the significant administrative burdens that the system is going to place on companies, and therefore, feel very comfortable saying that these provisions are going to significantly impact these businesses.
It definitely sounds that way. So does it require a transformation and a change to how organizations approach global compliance?
Our global clients have had to deal with and address, local country direct and indirect tax requirements for some time. Properly administering and adhering to these existing requirements is already challenging, and the resources that are already needed to administer these rules are extensive. But now with Pillar 2, our clients are having to deal with an entirely new system that has its own complexities, that is information and data intensive and administratively burdensome. If businesses And frankly, the professional services firms that serve them don't proactively transform to meet the challenges presented by Pillar 2, they face the possibility of being overwhelmed by this new regime. Specific with Pillar 2, transformational change in mindset is needed because this is a global tax system that effectively requires both global consolidated compliance and local country compliance requirements. Unlike what our clients have faced in the past, the complexity resulting from a global compliance requirement and then from specific local requirements is going to be extremely, extremely tough to administer, specifically because these local countries potentially have different rules. Some could be insignificant, not that significant differences, and some could be very different. And administering these different rules in different jurisdictions is going to be challenging. Thus, businesses will need to quickly transform their processes, systems, tax department structures, et cetera, to ensure that they're ready for Pillar 2.
And we know that Pillar 2 is going to continue to evolve. What do we see our clients actually doing right now?
I also think there's going to be an evolution over the next 2 to 3 years involving Pillar 2. That evolution is going to be the result of two things. One, the expiration of safe harbor rules, which mean more and more entities and more places, jurisdictions, will be subject to these rules. In addition to that, more countries are going to be adopting Pillar 2. So businesses are going to be subject to Pillar 2 provisions in more countries, thus increasing the complexity they face. As this evolution occurs, proactive global coordination of Pillar 2 activities will be key to properly adhering to these expanding requirements. From a coordination perspective, having the ability to communicate and share information easily, both globally within their businesses and with their service providers, is going to be paramount to the success of this coordination effort. At Deloitte, we have developed a technology solution that we call Intella that allows us to communicate, share information both efficiently and effectively on a global basis with both our internal client service teams and with our clients. We believe Intella will allow our clients to achieve their Pillar 2 coordination goals in an efficient and effective manner. Also, Intella is going to be used to house our Pillar 2 compliance and calculation cloud solution. This solution is currently being refined by Albert, who's on this call, and the rest of his team.
Yeah, Albert, let's bring you in here. So maybe to start off, is the Deloitte Pillar 2 solution available now?
Thank you very much, Kerry, and thank you, Scott, for a great introduction. It is available to demonstrate at the moment. If I give you a bit of context, Scott went through the challenges introduced by Pillar 2 and how organizations are dealing with it now and what the next few years look like. And as Scott mentioned, we are helping organizations plan for the introduction of Pillar 2. And as part of that, we've developed a number of accelerators. So we referred to the data diagnostic, which helps clients understand what data they need for Pillar 2 compliance and reporting. We've also got a legislative tracker that helps you track actually when the legislation is going to be introduced in different countries. So you can see when it's going to affect your organization. And we've got a Pillar 2 assessment tool, which is a calculation model in Excel, which does the full Pillar 2 calculation. And with those accelerators, we're helping clients plan for the introduction of Pillar 2. At the same time, we realized that we needed a long-term solution for compliance and reporting, and particularly with the compliance burden introduced by Pillar 2. So based on that Pillar 2 assessment tool, our calculation in Excel, which we've been using with many clients, so we built a cloud-based calculation tool which uses the same calculation as our Excel model and is tied into Intella. And this allows us to have a robust platform for the future compliance burden that Pillar 2 introduces. As I said, Deloitte Pillar 2 compliance and reporting solution is available to demo now, and we're expecting to start using it Q1, Q2 next year on clients on a selected basis. But our real focus is on the compliance burdens, so the first filings, which really won't be starting until calendar year 2025 and 26.
So we expect to see those additional functionality come out over time, is what I understand.
Yes, and we have quite a lot of functionality in the tool at the moment because we based it on our Excel calculation model, which does quite a lot of the calculations that Scott referred to, like safe harbor. It does the full globe calculation. It does the allocation of top-up tax. And we're now looking at introducing QDMDTs, given the change in the way the QDMDTs are being dealt with in the last 2 or 3 months. So we will have all the calculations required, and more importantly, we'll also have all the filings required, because there will be the central filing of the GIR return, but there will also be some local filings, and where they are part of the Pillar 2 process and part of the Pillar 2 calculation, we will build in those filings as well into our central tool.
And maybe talk a little bit about how this interacts with our clients' tools, what they might be using for forecast and provision.
So most of our clients will have some sort of in-house tool to help them with forecast or provision, be it one of the very the standard solutions like Corp Tax or our Thomson Reuters or Longview, or maybe they're using some business planning systems such as the Oracle solutions or the SAP solutions. So they will have something doing the forecast or provision process. And Pillar 2 is a process effectively on top of that. So it's layered on top of your provision or your forecast. And what we're expecting to have in the short term is, given the difficulty around the rules and how much change we're expecting in the first few years, for a lot of clients, there's going to be some sort of tactical solution to help them calculate the effect of Pillar 2 for their organization. And we're allowing clients to use both our Excel model and our compliance and reporting solution to help them calculate the effect of Pillar 2 in their organization. We want to be as flexible as possible because we recognize that one size doesn't fit all, and clients will have different demands in terms of actually what works with their internal systems. So we are planning to be as flexible as possible and really try and integrate in with the client's existing process.
Well, I can see where that's going to be important to a lot of clients, right? Because they don't want to redo all their existing processes, but at the same time, they need to meet these new requirements. So I think that's very helpful background. And Albert and Scott, thank you so much for sharing with our global audience in this series. As I mentioned, this is part of a series that we're doing focused on global Pillar 2 issues. So there is another episode that goes into detail on the safe harbors, both the temporary and the permanent safe harbors. And then a third episode that talks about tax accounting issues. So hopefully our audience will have a chance to listen into those. If you'd like to know more about Scott or Albert, you can reach out to them via LinkedIn. And if you'd like more information on Pillar 2 topics or a host of other global tax topics, please download the Tax at Hand app, where you can access a lot of Deloitte content. Thank you so much to our audience for tuning in today. I hope everyone continues to be well.